So yeah, let's pick from where we started yesterday.
Yeah.
So till yesterday we were actually going through just to summarize, maybe on a very high level. So we discussed about the insurance basics, covering what is the common terms that are there with insurance, like premium, policy, deductible, claims, and coverages. We also touched upon some of the types of insurance that are there, like you have health insurance, auto insurance, homeowners, renters, life insurance, disability, travel. We touched upon that. We went through some examples which basically shows what is insurance basics that are there. Then then we also went through the policy workflow where we discussed about what are the policy details that are there, where is the policy starting from quotation to submission, then moving on to policy creation, then the activities that happens within policy on a regular basis. Then we went through policy renewal, then we went through what is called a policy cancellation, and then also we touched upon the claim processing. We also looked into some examples to address that. Then we went through the process called underwriting and what is the result of what happens with underwriting. Then we touched upon the basic claim workflow. We started with claim reporting, claim acknowledgement, evaluation, damage assessment, investigation, settlement, claim closure, and also follow-up to make sure that the claim is closed completely. We took upon some examples for homeowners and auto for claims. And then we touched upon what is the basis of rating, how do insurance companies, who are the people who are involved with rating. We have actuarial, we have underwriting team who takes the decision on the premium. The actuarials will come up with the insurance, the final rate for each and every risk factor that is there. Then we also looked upon certain methods that are there. That is
Sorry to
employed.
interrupt.
Correct. Yeah.
Pranish, you actually named a particular group of people who would be in charge of fixing this rating. Actuarium.
They're called
Is that thing?
actuarial team.
Pardon me?
Actuarial. The term is actuarial.
Can you type that on chat?
They should be. Yeah, I can do that. Just give me a second. Actuarial.
Okay, got it.
Yeah. So they are the people who will be, like I said, who will be involved who will be responsible for coming up with the rates, and the underwriting team will actually use those rates to arrive at the final premium. Okay, and also we have various methods of rating that can be used, like you have experience rating, class rating, schedule rating, and also manual rating. Then we moved on to insurance billing. This basically tells how is the premium collected, because insurance billing is primarily catered around the premium collection portion. So it starts with the policy issuance, the premium that is getting collected, then the schedule for regular premium payout, the billing cycle, the payment method, then you go on to payment due date. Then if there is going to be late payment or grace period, that is also touched upon. Then you go into renewals and adjustments, and then the cycle continues. And we also have a couple of methods of billing that can be done. Regular one being flat rating, flat billing. Then you have something called prorated billing, and then you have something called a tier billing. Okay. Then we touched upon what is the difference between a personal and commercial insurance. Personal insurance being it protects individuals and families. Commercial insurance being it actually touches upon your businesses and organization. So typical example would be a personal auto and also a commercial auto. When you're using it for your personal use, then the same auto will be covered under your personal insurance. But the moment you actually use it for commercial purpose, then it will switch into your commercial insurance. Apart from that one, we also have other types of insurances that comes under commercial and personal. Then we went on to explain about what is property and liability. On a very high level, property loss exposure is the risk of losing physical assets due to unexpected events. And liability loss exposure is a risk that you could be held legally responsible for injuring someone else or damaging their property and be required to pay for it. In normal terms, this can be termed as a third-party insurance. That is what is meant by liability loss exposure. Then we started with what is the basis for the US insurance market, where we saw how is the US insurance market on a very high level is different from the other markets that are there, and what is the operational parameters that they use, and what is the market structure and framework they basically have within the US insurance market. So we stopped yesterday here. So let me continue on to the other topics that we have with respect to the US insurance market.
Okay.
Yeah. The next one that we'll touch upon is called distribution channels. So within US, you have multiple distribution channels. So when we speak about distribution channels, like initially when I was speaking, I touched upon certain terms called agents and brokers. So these are the people who are responsible for getting an insurance policy from any person who is in need for insurance, and then talking on or representing the insurance company and then making the policy effective. So the when it comes to the terminology, there is slight difference between whom we call as an agent and whom we call as a broker. So agent, per definition, these are individuals or businesses who sell insurance policy on behalf of an insurance company. So agents are people who are part of the insurance company itself. On the contrary, brokers work on behalf of the clients, helping them find the best insurance policy that suit their needs. Brokers ideally are not insurance people. Agents are insurance people. This is how US market works. So what ideally happens is like not every insurance company
So
would have.
sorry to interrupt.
Yeah,
So when you say agent is an employee of that particular insurance
correct,
business,
correct,
but
correct.
brokers are not.
That's correct.
But in the ecosystem, brokers work on behalf of the insurer. Sorry,
The
insured.
brokers will work behalf of the insured. So they are, I mean, the way it works is like they will be like they can be what they will do is like they can represent multiple insurance companies, and their primary working or whom they work for will be for the insured's benefit, not for the insurer's benefit. So in
Gotcha.
the US market, the reason you have this kind of differentiation is to make sure that there is fair play. Because if everybody is going to be on the insurance company side, then the insured would not have a say or cannot be represented. That is the reason. The same set of work is distributed between two people who their primary focus will be different. So ideally,
Gotcha.
agents will represent the benefit of the insurance company. On the other side, the broker will represent the benefit of the insured. When we say benefit of the insured, they will make sure that, for example, if I have to pick between two different insurance companies, then
Mhm.
agent, since he's representing one insurance company, ideally he will speak of that particular insurance company only and the benefits that are there, and he would say that the other insurance company is not good, but he will not tell you what is the difference or what is the benefit that is there. But a broker would speak on behalf of the insured to help them pick a right insurance policy irrespective of what is the company that is representing. This is the difference between agent and a broker.
Okay.
Okay. From, I mean, if you, this is something that if you go deep into insurance, then this will make a difference. But ideally, from a normal system perspective, this actually does not make any difference. Either ways in the system, either it's going to be an agent or a broker, you're going to enter the same user. That's it. This
Okay.
is from an operational perspective, how it differentiates between agent and broker. That's it.
But otherwise, as from the platform perspective, both
Both the
has
same.
same. Okay.
They both have the same.
And
There
they
is no
both
difference
have
between
same
both of them.
features and
Yes,
accessibilities.
correct. Yes,
Okay.
correct. Yes.
Gotcha.
The third one is like how we discuss. It's called direct sales. Like some of them will directly reach out to the customers either through websites, like how we in India we have Policy Bazaar. Similar to that in US, we have direct to sales where they will actually you can directly approach either through their websites or common websites and internet aggregators. You can use them or through the phone, and then you can actually get your insurance policies. So these three are the distribution channels available in US.
Mhm.
Okay.
Okay.
Moving on to the next, this is something called regulation of US insurance market. We touched upon this previously. So US insurance market functions in two levels. One is a state level regulation that happens. Then we have a federal level regulation that actually is in place. So when we go into your specifically on the policy, the personal auto and also for workers' compensation, I will elaborately let you know what are the state level regulations that are there and what are the federal level regulations that are there, which differentiates this particular product, that is PAP and workers' compensation. But as of now, I'll just touch upon saying what is the meaning of state level and federal level regulations. Okay, because for each and every product, the state level and federal level regulations will vary. It is not something that is common across all the products. So on a very high level, state level regulation is in US market. This is primarily regulated on a state level. So US market is a state level regulated market. And each of which oversees operations of insurers within its jurisdiction. The role that the state level regulation will play is they will approve the premium rates, which is given by the actuarial.
Sorry
The
to
premium rates,
interrupt. I'm afraid we're on the same screen. Do you want to switch over?
sorry,
I'm afraid we're on the same screen. Same
no,
slide.
no, it
Is
is
that
the
it?
same slide
Okay, fine.
where I have notes where I'm looking from the regulation. I'm on the
Okay.
regulation side. So when it comes to your state level regulations, so they basically what they do is, like I said, the actuarials who actually come up with the premium rates, the approval is given by the state level regulation. Also, they will set the licensing requirements for agents and brokers. The agents and brokers that we spoke, the licensing requirements is determined by the state. Third, they also ensure that compliance within the state laws regarding insurance practices is also done by the state level regulations. They come up with the laws, they make sure that the laws are also enforced. Fourth, they protect the consumers from unfair practices and financial insolvencies of insurers. This is very important because for an insurance company to start within that particular state, the state level regulators will have rules and regulations which they put in place saying that to prevent the financial insolvency, they make sure that the premium basis or the premium that the insurance company is collecting, is it adequate to run a particular insurance company on a fair basis? In the sense like it's on profitable basis. So if it goes out of profit, it becomes bankrupt, then the state level regulators will be the first people who will actually have to bring that particular company out of bankruptcy, and also what are the the claim that's outstanding claims, everything uh, has to be fixed and then corrected by the state regulators. So that's the role of state regulators. Moving on to the federal regulators, there are some federal regulations that affect the industry on a very high level. So, for example, which cannot be done by the state. First thing is your Affordable Care Act. So these are all in US. You have federal acts, which is like which they have made sure that the entire US as a country is actually benefited from certain insurance policies. So for those insurance covers and all those things, you will have the federal regulators which come into picture. The first one being your Affordable Care Act, which governs your entire health insurance policy and mandates certain coverages standard for health plans. So this ACA, there is Affordable Care Act, is something that is federally regulated. It is not regulated on a state level. Second thing is your Federal Insurance Office. This particular Federal Insurance Office acts like the insurance agents, a federal level organization that is given by the US, which maintains all the necessary details for US insurance in particular. Even though they do not have direct authority on the premium rates and all those things, they are an overseeing authority which makes sure that all states are complying to the regulations that US as a federal state, whatever the regulations that they put in, all those things are enforced done by a federal insurance office. Third thing that you have is called a National Association for Insurance Commission, NAIC. This organization is made up of state insurance regulators that sets model regulations and standards to guide the states. So NAIC is a collaboration of all state regulators who come together and make sure that the whatever the laws that are passed by each and every state, is it actually meeting standards? If there's anything that is improvement that is required, all those things and decisions all are taken by all the states combined. They actually form an organization called NAIC. So apart from these three, uh, as
What
of
does
now, no
NAIC
other.
stands for?
National Association for Insurance Commissioners.
Okay.
They are like our IRDA, if you can put it that way. In India, you have something called an IRDA. If you buy any insurance policy, you'll have something called IRDA regulated, which is Indian Insurance Board that is available. Similar to that, you have something called the NAIC,
Okay.
which is like your all the state regulators will come together, they form something called a national level association, where they will take decisions on a federal level, saying that one state I've implemented something, these other state also can benefit from that one. So that decisions and that regulations will be done by the NAIC.
Okay.
One other point to note, none of your federal commissions that I spoke about has any authority on the state. So they cannot go and tell a state saying, okay, you have to do this, you have to do that. That authority is not with the federal government, it is only with the state. They are just a governing body which can give advices or which can actually tell what are the benefits that are there, what are the features or something that can be done, but they don't have any legal binding on any of the state regulators. That is the reason US insurance policies are state regulated, not federally regulated. Okay. Then we will skip to something called a market trend and key issues, which is like to understand what are the upcoming US market features that are coming up. So first thing is like you have something called technology and insurtech. This is where what do you say, the in future what are the features that the insurance as a market can actually pitch into and how they can revolutionize. So you have companies that actually now are catering into artificial intelligence, data analytics, blockchain, and also reduce cost and enhance customer experience. We'll be touching upon this when we go into your software solutions, which will be in the upcoming slides. And also you have issues
Sorry to
coming with,
interrupt, Pranesh.
yeah.
I have hard stop at 5. I need to pick my mom.
Sorry.
I have a hard stop at 5-ish.
Okay. Then can we continue the rest in the next session? Will that be okay?
Okay. The reason I told you is if you want to detailing go about any new concepts, I have a hard stop at 5.
So what I will do is, in that case, I will close this particular slide, which is I'll
Okay.
go through your market segmentation, and then I think, yeah, I will be able to stop till your insurance market. Is it
Perfect.
okay? I just want to close
Yeah.
this slide.
Yeah. That should be fine.
Okay, sure. So yeah, so like I was saying, the climate change that actually happens, your flood and hurricane. So this also has an extremely important aspect on the insurance regulators because, like I said, the actuarial team are people who look into regular basis to understand what is the current trend that is happening. So, for example, California, which slight example, California is always prone to your fire and flood on a very regular basis. So, all your home insurance policies, which is taken in the state of California, has got a higher premium compared to, for example, a state like Michigan or Texas, where you don't have such a high risk of fire. So, because of the climate change that happens, more and more states are now prone to natural hazards. So the premium rates has to be regulated regularly. The premium will increase. The factors will increase. New factors might come into picture. Previously, some state which I mean, some insurance companies which did not naturally give something like an earthquake insurance or a pollution cover. In future, those might also become normal. Like under a home insurance, there might be reason for you to cover pollution also. So
Sorry to
those are the
interrupt. I have
changes that are,
one common question here,
yeah.
Pranesh. So if you look at the Indian geography, yeah, we live in a home.
Manoj,
We don't.
if you don't mind, your voice is a bit low. Could you either speak up or increase your volume?
Uh, it is all increased. Yeah. Can you hear me now?
Yeah, I'm able to hear you, but it's a bit low. I'm not sure why. That's okay. I'm able to hear you. You can continue. Wait,
Okay.
what was your
So
question?
one common question is if you look at Indian geography,
Mhm,
we have our own homes, we have our own vehicles, we
mhm,
do go to hospitals,
mhm,
but generally we don't have insurance or we don't have our property or vehicle insurance is common and
mhm,
health insurance is common in India.
mhm.
These are two things I've seen.
Correct.
But otherwise there are different other insurance.
Mhm,
uh so you mean in what do you call it? In US geography, one
mhm.
would have all of these insurance
Yes.
to them?
Yes. So in
Oh,
US, it is mandatory to, I mean, when I say mandatory, home insurance is something that everybody would have.
uh-huh,
Vehicle insurance is something that everybody would have.
uh-huh.
And then your general liability insurance is very common across, even for your personal. I mean, I'm not speaking about the office parameters because in India also, when it comes to the commercial side of it, you have most of the insurance that we speak about is covered under your commercial space. Say, for example, commercial side, general insurance, general liability is something that is very common. But on personal level, when we speak about which you're referring to in common, home insurance is something that is very normal. Auto insurance is something that is very normal, and also some level of liability insurance is also taken on a very normal basis. Health insurance is either government regulated or it can be taken privately, and workers' compensation is something that is also very common. So if you take an Indian parameter, home insurance, and then your workers' compensation and liability insurance is not something that we take on a regular basis. The only liability insurance we take is your third party because it is mandatory. That is a liability insurance. Third party vehicle, that insurance is a liability insurance. We take it in India because it is mandated. Apart from that one, we don't take anything like a general liability. But in US, that is very common.
Okay. Yeah, that's something a very common
Yeah.
understanding that I wanted to
And
make
also,
sure.
yeah, in recent years, maybe for the past 5 to 10 years, cyber insurance also is something that is commonly used in US, which in India on a personal level, we are not using it. When I say personal, like personal insurance, you still don't have a penetration of cyber too much. But in US, cyber insurance is something that is even penetrated into the personal market also.
Okay. So they are insured everywhere.
Yes, they are. Yes, they are.
Okay.
And that is one of the reason, if you look at it, I mean, I'm not sure how to put it. The standards are maintained very high in US. One reason for is because it is insured everywhere and anybody can claim anything. They can sue even the government saying that the road is not laid properly because that is also insured. So insurance, I would say, is one of the reason why the rates are high, standards are forced to be maintained. Just on a, I mean, this is my personal assessment. But if you look at the market trend also, this is something that people would kindly agree on.
Got you.
Okay.
Yeah.
So yeah, moving on to, like I said, cyber insurance is something because currently, I think in the last 15, 20 years, even cybersecurity insurance is something that has grown very heavily in US. And there are also the coverages that is previously there under cybersecurity. Also, there is a growing trend that is replacing that one. So that's a field that actually is also increasing or growing with respect to the insurance market trend. And the last one that we have is something called auto insurance and usage by policy. This basically will cover all your what do you say, artificial intelligence, self-driven cars, all those type of vehicles that are coming in the future or that are already in the market. You have a separate insurance which still is in the making, which also governs your auto insurance. Like your Tesla cars, they have a separate kind of insurance, which is not normally given by your other insurance company. So those are the market trends that we see where the insurance field is finally growing, just on the market trend perspective. Um, Moving on to the next one, where we have insurance market segmentation. So US insurance market is basically on a very high level is classified into three sections. Leaving aside your life insurance, you have something called personal lines, then you have commercial lines, and you have reinsurance. So under personal lines, most of the items that is coming under personal lines would be your auto insurance, homeowners, life, health and disability insurance for individuals and families. Commercial lines includes coverages for businesses ranging from general liability to workers' compensation and business interruption. Commercial insurance is something that I mean it I cannot put it in a bracket saying this is what comes under commercial insurance. Anything and everything that you can think about comes under commercial insurance. I can say to the extent saying that your space exploration, that also comes under commercial insurance. Your cargo vehicle, that also comes under commercial insurance. Military equipments also are sometimes covered under commercial insurance. So the space or the coverage of commercial insurance is anything and everything that you can think about except for life will come under commercial insurance. That's the scope that is there for commercial lines. Okay. And then the last one that we have is reinsurance, which is basically, like I said, the insurance company would actually get insurance from another insurance company or a provider where it is called reinsurance. It is a huge market. And also there are very few reinsurance companies which has the capacity to provide reinsurance. Because, for example, if an insurance company has to start business in one state, if they need, for example, $10, then to actually have a reinsurance company, the expected will be 100 to 200 times more than what a normal insurance company. The premium basis, that the financial stability that you look for in reinsurance company would be 100 to 1,000 times more than what you have for a normal insurance company to start business. So that is, there are only few companies that are existing which can provide the reinsurance space. One example, like I said, is Swiss Re. Then you have something called Minicre, and also you have AXA. AXA also provides reinsurance. So these three are the companies which, on a very high level, provide reinsurance space, which operates in US market.
In which domain you as a business analyst, you are kind of well versed? Because I see a lot of insurance stuff, meaning types of insurance. So in which domain you are working at the moment?
I'm currently, you're asking me?
Yeah.
Oh yeah, I'm working under personal and commercial insurance, which is basically which covers all the topics that I spoke about, like auto. I have expertise in auto insurance. I have expertise in home insurance, and also I work on commercial lines. Like I've covered workers' compensation, commercial auto, commercial general liability, commercial umbrella, property. So those are the lines of expertise that I have. And also I have touched upon reinsurance. Uh, from what do you say? I have good knowledge on reinsurance, but I have not worked too much into from a application perspective. I have knowledge on reinsurance, but Guidewire does not provide reinsurance, but I have working knowledge on reinsurance. That would be my expertise.
Okay. Yeah.
Okay. We will then move on to the market size and the leading players. So US is one of the largest and the most competitive insurance market in the world. Some of the examples where we have is like health insurance. You have companies like United Health, Anthem, and Aetna are major players in the health insurance market. In auto insurance, some of the leading insurance expertise would be your State Farm, Geico, Progressive. And the life insurance, you have MetLife, Prudential, Northwest Mutual. So these are the leading market players who are there within your life insurance market. Um, yeah. I think the next topic that would come is insurance product. So I think I will stop here and then maybe next we'll take on the insurance product, if that's okay with you.
Yeah, it should be fine. And then from the interview standpoint, what are the questions could be asked out of these basics that we learned so far?
Uh, from interview perspective, so if you're saying that you're an expert in Guidewire, then the topics that these are all the one what we discussed now are very basic topics. So the reason is like if you say insurance, I mean with the experience that you have, people might not ask these topics. They expect that you know it already.
Okay.
Like for example, they might touch upon saying, can you just maybe give an example of a policy workflow? Then the one that I showed, if you're able to explain it, then they should be fine. Or they might ask you like touch upon saying, okay, what is an underwriter or what's a claim workflow? These are all that's the reason I put all
Basic
these things in
stuff.
the slide.
Okay.
Correct.
Okay.
They might, I mean, ask you saying, okay, can just touch upon what's a policy workflow to make sure that you have basic understanding. Or they will ask
Gotcha.
you saying, okay, what is a rating or what is a billing? That might come into picture.
Okay.
And this US insurance market, and this is to make you comfortable with understanding saying why does Guidewire exist in the first place. Because without understanding this US market trend and the further topics that I have, you might not understand why is why is a product called Guidewire even existing in the first place. That's the reason this is more for your benefit. But it's good to know these things because when you operate in Guidewire, you will have a better, you will feel comfortable when you know the background behind it. So these 4 to 5 slides is basically for you to feel comfortable to understand why Guidewire is existing. But all the other topics that are there can be asked in an interview, but maybe on a very high level.
Fair enough. Yeah.